Welcome to my channel. This is the Trader Investor, and this is the market analysis for the trading week of March 8th. Don't forget to subscribe, hit that bell notification and the like button if you find this a very useful video. Just to start off, just a disclaimer, this is for educational purposes only. Nothing in this video is meant to be a recommendation to buy or sell. I am not a licensed broker. I'm not a licensed financial advisor. I'm just here to educate you. And as you know, there's risk with any kind of investment, whether you're doing options, futures, stocks, there's investment risks. So please be aware of that and use this for educational purposes only. So to start off the analysis, I look at sentiments. That's the first thing I look at. Is I start out the week, what is the sentiment for this week? What are the different gauges telling me that the market is feeling? Is the market very bullish? Is the market very bearish? Or is the market neutral? That's really one thing I want to look at as I do my analysis, the first step of my analysis. And for that, there are a few tools that I use. I use the CNN Fear and Greed Meter. I use the put call ratio, the VVIX, and UVXY. And I'll go into each one of them in just a little bit to detail out how I look at them, how I take advantage of them, and how I position myself according to what those sentiments are telling me. That's the overall broader market sentiments. That's what I want to look at as I make my analysis. So let's start with the fear and greed meter, right? That's the CNN index. So today, as you can see, it is at 70. 70 is not extremely bullish, but it's not neutral either. So it's starting to skew towards the extreme bullish side, but there's still greed in the market, meaning everyone is thinking that we're in a green territory, the sky's the limit, we're heading ahead. So that's what I'm looking at when I look at the fear and greed index. 70 is good. 50 is neutral. There's nothing bad with neutral. I just position myself and look at trades that align with that sentiment. If it's too bullish, I don't want to take bearish positions. If it's too bearish, I don't want to take bullish positions. Or if it's neutral, I also don't want to be on the wrong side of the trade. So there must be some range happening. So I want to take advantage of those ranges. So that's the first thing I look at when I look at sentiment. The second thing I look at is I'll go down to my charts, and this is where I have identified some potential areas of market fear or market greed, and I use two different indicators, the put call ratio, and I use the VVXI, VVIX. The put call ratio tells me, based on the number of total puts in the market versus the number of total calls in the market, what is the market sentiment? The more puts we have, the more fearful the market. That's what I want to make sure that I'm looking at as I look at the put call ratio. So today, if you look at the put call ratio, it's below 0.8. When it's below 0.8, the market is very bullish. The market is happy. When it's above 1, the market is very fearful. So I position my trades accordingly. And when it's in between, and I have marked this as yellows, this is a cautionary area. When it's yellow, it doesn't mean the market is going down, as you can see on this hourly chart. It just means I need to be cautious. I need to take advantage of pullbacks to go on the long side. And once the long-term outlook breaks, then I look at pullbacks to go on the short side. So that's what I look at for put and call ratio. The next thing I look at is the VVIX. This is the rate of change of the VIX itself. Again, as you can see, I have marked them in different colors. Right now we're in yellow, we're above 110. I would like it to be below 110 to be extremely bullish. If it's above 120, it's extremely bearish. That's, as soon as it gets in that area, that's when I look at other chart patterns or candlestick patterns to go on the short side. Right now we're above 110. So that tells me, cautious is the end game. Doesn't mean I'm not going long. I'm going long. I'm taking advantage of, dips to go long when the setup presents itself. But just these are the two things that I look at. Then another thing that I look at is the UVXY. And the way I look at that specifically is to tell me, based on the UVXY's movement, I can predict and analyze that what the spiders would be doing. So as you can see, the spider is the first chart on an hourly, same hourly for UVXY, and then the 10-year bond. So the way they move is, as UVXY drops, stock prices rise. As 10-year bond drops, UVXY drops, stock prices rise. So I use this again as a sentiment to kind of guide me which way the market is potentially heading to. Not just to look at this and say, wow, I'm going to get in because I have a red candle in UVXY, because sometimes spiders could lag, right? So we want to make sure that this is what tells me the sentiment, and based on the sentiment, I take my action. So now, right now, the sentiment is slightly bullish. It's above neutral. Everything is telling me we're heading still in the up direction. So I'm happy with that. So before I place my entries and my exit, this is my first step. So the second step then is to look at market structure. When I look at market structure, I look at SAVE. This is something that just helps me remember very easily what I need to look at. The structure, area of value, and then execute, entry and exit. Before I enter a position, once I understand the structure, once I understand area of value, and I know where my entry is, I already know where my exits are. And exits with an S, because there's an exit if I'm wrong, there's an exit if I'm right. Both sides have to be in place before I pull the trigger on my brokerage account. Extremely, extremely important. This is how you manage your risk. This is how you manage taking emotions out of the equation. You let the charts dictate. If it goes up, here's my exit. If it goes down, here's my exit. Done. No discussions. So it's very, very critical to be aware of that. So as I look at structure, what is the market telling us? I want to anticipate. I do not want to predict. Based on my analysis, based on where the structure is, I want to make some anticipated moves. And once I understand the structure for my area of entry, where is the area of value? Where do we see areas, bulls and bears, take control of the current market? So in my sentiment, I already know I want to play on the bullish side, not the bearish side, especially when looking at the indexes, the spiders, the Qs, IWM, and the diamonds. When I'm looking at these four, I want to play on the bull side, not on the bear side. So I'm taking a look at areas of value. So the way I do that is I come back to my charts again. So let's start with the spiders, and I have the four layouts that I usually use. I have my monthly, my weekly, my daily, and my hourly. My hourly, I use it for my entry signal. Sometimes if I know that for a particular day I'm not able to monitor the chart during the hourly, I'll just use the daily as my trigger. It all depends, but it gives the way I have it set up, it gives flexibility to anyone who is interested to pull the trigger, whether you do your analysis at the end of the day or you do your analysis during the market hours, and you have the ability to watch the market on an hourly basis. And the reason why I love hourly is because I only need to monitor the charts for 2 to 3 minutes every hour. At the top of the hour, 2 to 3 minutes, what did the market close at that hour, the previous hour, because I'm looking at it at the top of the hour, and based on that I make my decision whether I want to place a trade, or if my narrative is still the same as the night before. Are my trades, the way that I have set them up, still valid? Do I need to exit any position? Do I need to enter any new positions, or do I need to make any adjustments based on what the charts are telling me. So when I start with the monthly, what I want to look at the monthly is, where is the market heading? What is the structure? And right now in the spiders, as you can see, it's a very strong uptrend. And I'm not only looking left to right, I'm also looking at currently what is it doing, and I want to take advantage of that. And then same thing for the Qs. What are the Qs doing on a monthly basis? Again, it's an uptrend, but with more cautious on the Qs, because that uptrend kind of was broken. We have a long wick here on a monthly that is broken, but again, because price is starting to come back towards that zone, I'm not that worried about the Qs breaking down and hitting the bottom. No, but I'm just cautious because trend lines are starting to break. So coming back to IWM, very strong uptrend, very, very strong. Diamonds. Before I even look, because we've been making new highs over and over and over, I know that it's a very strong uptrend. Now, there were some areas of consolidation on a monthly basis. You can see them, 3 consecutive months we played in a tight range, open to close. We go up on the wick, but open to close in a tight range, but then we break that range and continues that upward movement. So here's what it looks like on a monthly. Now my next chart that I look at is the weekly. On a weekly basis, what is it doing? Has anything changed in relation to the monthly? Because when I draw my trend lines for the monthly, I keep them at a different color, so I know whatever time frame I'm looking at, what trend line that is. So I know this is a monthly trend line, and the weekly trend line, again, tightly has its own channel up and down. And my support and resistance is not only trend lines, I also use horizontal support and resistance. So depending on what the chart is telling me at that moment, but we have some strong moves here, so I followed that move. So the diamonds are doing really great on a weekly basis. IWM, very strong upward movement, but some potential weaknesses last week or the week before, and then last week it really rallied, and that rally continues, but we're tethering around the highs now. Qs, this is where as I mentioned on the monthly, this is where I see some cautious areas, and I have drawn here a box of support area that Qs have been coming down to on a weekly basis twice already. I broke the high of last week, so I'm thinking that the market is going to continue to go up, but I'm cautious because we have broken the trend line, and I just want to make sure that we are making new highs and making new higher lows and not making new lower lows. So I don't want to see another low above this zone here. If that happens, then my narrative changes to a bearish for the Qs. Spider on a weekly basis, it is telling me that we're still in a strong uptrend, nothing to be concerned with. But because of where the VVIX is in the yellow zone, where we look at it again when we go to the hourly chart, I am cautious, but still playing the long side. So then, going down to the daily, this is where you can pull the trigger, or this is where you can confirm what are some short-term zones I can take advantage of. So this is where I drew some support and resistance lines, and I have my long-term trend line. When I hit my long-term trend line, I come close to it. That's where I want to pull the trigger. And I use the hourly to really precisely pull the trigger. So I'll show you where I entered in this one when we go to the hourly. So it comes down to that trend line. That trend line coincides with a support line. So this is a very good area for me to be very comfortable to go on the long side once I get some confirmation on the hourly chart. If you're not trading the hourly chart, what I would normally do is I take the lowest bar, and as soon as I break the high of that bar, that's where I would look at entering. And when I say as soon as I break it, I just look at one day, has it broken it, and the following day, that is it still continuing to go on the upside. So this is where I want to enter. As you can see, there was one day that it broke it, but the following day it went higher, but it still closed down, but it didn't close below the open. So I'm very comfortable on this 20 on the 8th of March for me to enter a new trade as soon as I have a price above the open of the 8th. So the following day when I get a price above it, that's when I enter, and I'm comfortable entering that trade. So that's the spiders on the daily, and the cues on the daily. We have been making lower highs. We've been making lower highs. Even a couple of days ago, we did not manage to make a new high. We didn't break the latest lower high, so we are still below a new lower high, and we're making lower lows. We've broken the low of January. We've broken the low of January 29th. We've broken the low of February 23rd. And now on March 5th, we have a new low, which coincides with some support line and then that support zone that I drew. And, if you take this trade because we're at support line, just be very, very cautious that there's some headwind coming up because we're making lower lows. So I'm not taking any trades on the Qs because I'm not comfortable yet that we're out of the woods to be comfortable to go on the long side. On the daily IWM, we had broken it a couple of days ago, our trend line, monthly and weekly, a very strong upward movement, but on a daily basis, we had broken it. We made a new low, but then we made a new higher high, and we're even closing in record territories. So I'm very comfortable here. With this one, what I would like to see is I want to see price come down here and then price make a new higher low and resume its trend. So this would be a very good area, the 226 area, for me to enter a position. I feel comfortable because it's a previous trend line. It's near short-term support line, and I feel very comfortable if it does that pullback to enter there. That's a good spot there. Looking at the diamonds, diamonds are in a very, very strong uptrend. The blue line is my monthly uptrend. We're far, far away from monthly, and the green line is a daily time trend line, and we're playing in that trend line. We're bouncing between the upper and the lower channel of that trend line. And now, a couple of days ago, we've already broken out of that trend line. Again, similar to the IWM, I would like to see price pull back to the upper end of this trend line and resume its movement upwards for me to enter my next trade, because the trades that I've entered are February 2nd and February or March 5th. These were trades that I was able to capture based on the hourly charts. So this is my daily. Again, if you're only staying at the daily, make sure that you come to an area of value, and based on that, when price reverses from that area of value, you enter it. You could even do, instead of waiting for a close above it, you can just draw a small trend line, and as soon as price crosses that trend line, you can enter 315 area and just ride it up, and just make sure, because price was bouncing off here, just be cautious. Maybe sell half of your position near the highs, and then the other half, just you're cautious enough, you're just letting it ride, and you have a tight stop because the trend line is at play. And as you can see, they did really, really well for the last few days. So now then, my final entry trigger for me, this is the hourly. As I mentioned, I just watch it just a few minutes every hour during market hours. I don't need to monitor it outside of market hours. So what I'm looking at is right now on the diamonds as an example, when price comes to an area of value, I want to see a short-term trend line broken. And as soon as that is broken, that's where I'm feeling comfortable to enter. Because this was a very good gap, I'm comfortable entering it right away. Sometimes if it's just a small movement up and breaks it, I will wait for a pullback, making a new higher low to make sure that I continue the trend. Because as you can see, this one, it didn't go far. It just went from 312 to 316, but that's okay because I am watching, every hour what is happening. And when I see a resistance line coming up, this was a resistance here, and price for a few hours fails to penetrate, I exit and look for the next opportunity. Next opportunity came when price tested area of value again. It broke area of value, but a few hours later, it closed inside it. So here, I want to make sure that I am breaking this trend line before I enter any position. So I broke it. This is what I mentioned. If it comes up slowly, if it comes up slowly, then I wait for it to pull back and then enter. Now, if it makes a big move and crosses my trend line, I'm more cautious because I really want to see a pullback before I enter, because it could be a fake breakout. I don't want a fake breakout. I want to make sure that it is a valid breakout. It is supported by volume, and the day or the hour that it breaks out, volume was really high. It is supportive of that narrative. So I wait for a short pullback and enter the trade. So diamonds right now, as you can see, very, very strong. And I don't see any pullback potential yet for now. But, again, I will do this analysis again, the very next day and the day after, just to make sure that I don't miss any new opportunity. IWM is kind of similar to the diamonds when it comes to an area of value to enter right now. If you have missed it already, there were a couple of trend lines broken. I did not take this one because we were already below the monthly trend line. So I wanted to see a new higher high made. So, right here on the 10s, we made a new higher high, and we also kept the lows, right? We kept making new higher lows. So I was very comfortable to enter a trade in the 227 area to write it up. So this is just an analysis on what to expect. I'm not going into targets in this video. I'll definitely walk you through my thought process on how I set targets. On the cues, I'm not really looking at anything right now except just to monitor what is the cue structure doing right now. Structure-wise, the uptrend is broken. There is no significant downtrend. So this is just a sideways movement. So I'm just monitoring it just to make sure that if there's an opportunity, I can capture it. But right now, there's no movement that tells me which way it is heading. So for my entry and my exit, I just want to make sure that I have some opportunity. Now here on the spiders, we have made new higher highs, higher lows, and I drew a trend line over the last couple of days. We broke that trend line, but we did not make a new lower low, so I'm very comfortable, and I have entered a position at the 393 area, waiting on my target. Either I'm wrong when it breaks around the 390, or it's going to continue to go up and hit my target one. So this is how I'm looking at the market overall, the broader market for this week of March 8th. And so we looked at our area of value and our entry and exit. So there was nothing to enter today because based on the analysis that we just went through, we haven't seen anything. But what we're doing is we're waiting for a pullback. We're waiting for a breakout of the hourly trend line to make sure we can enter a position. And once we enter a position, we have to make sure that we are setting targets, right? Targets at the Fibonacci level, recent swing levels, or an opposite signal based on chart pattern or candlestick pattern. So just make sure that we are looking at that. So we want to make sure we're getting paid when it's desirable for us to get paid. We don't want to wait until we are forced to get paid. So with that, thank you for your patience as we went through our analysis, and don't forget to subscribe and hit that notification bell so that you get notified when I release my next video. Take care.